For this session, we will talk about your customs taxation, particularly the powers of the Bureau of Customs, and what is the power of your local customs. How will we tax, or how does the customs tax imports and exports? And what are the different types of duties that is imposed by the Bureau of Customs, whether that is a specific or a regular duty, and how do they compute for those duties? So let's start now and discuss, of course, customs taxation. So your customs taxation came from your tariff and customs law. If our national taxes and local taxes comes from your NIRC and the local government code, national taxes, NIRC, local taxes, local government code. Now your tariffs and customs law comes from your tariffs and customs code. Okay, remember that. National taxes, NIRC, local taxes, local government code. Now we have tariff and customs coming from tariff and customs code. Furthermore, of course, any regulations provided by the Bureau of Customs. In case for NIRC, you have your different regulations, RRs, RMCs coming from the BIR. Because again, as I told you, for your national revenue taxes, it is administered by the BIR. But for your TCC or your Tariff and Customs Code, the different regulations comes from your Bureau of Customs. If the BIR, we call it Commissioner of Internal Revenue. Your BOC, we call it Collector of Customs. Collector of Customs. So it is headed by the Commissioner for BIR. For BOC, it is headed by the Collector of Customs. I don't know why is it Collector, why is it not Commissioner of Customs, but yeah, that is the title of the head of your BOC. Okay, so remember the differences and the different sources of these laws. For national taxes, NIRC, local taxes, LGC, tariff and customs code. So let's talk now to the main agency which now administers the tariffs and customs code, and that is your Bureau of Customs. So what are the functions of the BOC? So the following are the functions of the BOC. The first is the assessment and collection of the lawful revenues from imported articles and other dues, fees, charges, fines, and penalties under the tariff and customs law. So they will now assess and collect for importing of different products or articles. Okay? Take note for customs, they can only assess for taxes for importation and exportation. As I told you, if ever we will import articles, generally before it can be taxed for VAT, it must first pass through your Bureau of Customs. So in this case, the importation will first pass through your Bureau of Customs before it will go to your VAT under your BIR. Take note, all importation and exportation are within the ambit of your Bureau of Customs. So it's within their power. So any assessment and collections as to that will be under the Bureau of Customs. Next function of the Bureau of Customs is to prevent and suppress smuggling and other frauds upon the customs. I don't know if ever you always hear this news that there are certain articles that was found as smuggled by the Bureau of Customs and they will destroy it. So that's part of the function of the BOC. Sometimes I tell myself, why would they just rather destroy it and not to donate it to those who are in need. But again, as their function, which is suppress smuggled goods, uh, and it is part of their procedure to destroy smuggled goods. That's why I think they would rather destroy it. But if you try to think of it, it is more useful if ever those smuggled goods will be redistributed to the economy. But anyway, it's the procedure of the BOC, and we cannot find wisdom with it, or we cannot uh, try to seek the wisdom of it because it's their procedure. And yeah, that's how it is. Let me see. Supervision and control over the entrance and clearance of vessels, aircrafts engaged in foreign commerce. This is, of course, as to your importation. If ever these vessels and aircrafts now enter the Philippine jurisdiction and they have with them imported articles. Next, enforcement of tariffs and custom laws and other laws, rules, and regulations relating to the tariff and custom administrations. Of course, they are the main agency who administers customs. Therefore, they will enforce all the laws relating to customs and tariff laws. Next, supervision and control over the handling of foreign mails arriving in the Philippines. Anything of articles that arrives in the Philippines will be supervised by the Bureau of Customs. So imported articles, vessels and aircrafts which arrives in the Philippines, including foreign mails which arrives in the Philippines, they have supervision and control over those. Next, supervision and control over all import and export cargoes, landed or stored in piers, airports, terminals, facilities. So it's almost the same with what we have discussed a while back. So anything that comes through here in the Philippines or comes here in the Philippines will be supervised and controlled by the Bureau of Customs. Lastly, they have exclusive original jurisdiction over seizure and forfeiture cases under the tariff and customs law. So as I told you, if ever there will be smuggled or fraud articles, what will the Bureau of Customs do? Will seize that and forfeit that. And if ever you want to protest out of that seizure and forfeiture, you will exclusively protest it under the Bureau of Customs, not under the judicial branch. So again, this is somewhat part of your administrative exhaustion of remedies, wherein you first exhaust the remedy under the Bureau of Customs before you can go to your judicial remedies. So that's one part. If ever the Bureau of Customs will seize or forfeit some articles or products. Generally, some of the most common reason is that they are not properly stated in the import import that that particular box contains this following items, the amount of that item. So those are the most common reasons why some are forfeited or seized because they are not properly declared. So they don't declare the actual amount or the actual items inside that box. So doon naman normally pumapasok yung mga smuggled items natin. Yung tipong sasabihin nila it is medicine but it is not medicine. Mga ganun. It is for household but it is not for household. So those are the common reasons for seizure and forfeiture. How about the functions of the Bureau of Customs under the Administrative Code? So a while back, the functions of the Bureau of Customs pursuant to your Tariffs and Customs Code. Now, how about in your Administrative Code? First, of course, is to collect your customs duties, taxes, fees, charges, and penalties, account for all custom revenues collected, exercise police authority for the enforcement of tariff and custom laws. We already know this one because they are the main enforcer of the tariff and customs code, including any regulations provided by the Bureau of Customs. They will prevent and suppress smuggling, pilferage, and other economic frauds, which was already discussed a while back as functions including the other functions provided under your tariff and customs code. Supervise and control exports of vessels and aircrafts in all ports of entry. If you remember, this item was placed into one single line item, particularly supervising for imports and exports. Letter F, administer all legal requirements that are appropriate. So legal requirements both for your export and for your import. Generally, We call this import documents or export documents. Letter G, prevent, prevent and prosecute smuggling and other illegal activities in all ports under its jurisdictions. We have discussed this already as part of the functions of the BOC under the TCC. Letter H, exercise supervision and control over its constituent units. So all constituent units, particularly under Bureau of Customs, and lastly, perform such other functions as may be provided by law. So as you can see, the functions provided under the TCC is quite repeated in the administrative code. If it's not repeated, it is only expounded. But it is almost the same. So the functions provided by the CCC, TCC, and the AC are almost the same. So TCC, Tariffs and Customs Code. AC is your administrative code. We go now to the jurisdiction of your Bureau of Customs. Since the Bureau of Customs is an agency of the Philippines, therefore, the jurisdiction is only within the Philippines. Okay, so the right of supervision and police authority of BOC cover all seas, coasts, ports, airports, harbors, bays, rivers, inland waters within the jurisdiction of the Philippines. So long as it is within the Philippines, so going to the Philippines or going in the Philippines or going out of the Philippines, that is within the jurisdiction of the BOC. Going in, import, going out, export. So tariff and customs laws are applied only after importation has begun, but before importation is terminated. Thus, the jurisdiction of the BOC attaches only after importation and retains up to the time that importation is deemed terminated. So the question is, when does it begin? So importation begins when the conveying vessel of the aircraft enters the territorial jurisdiction of the Philippines. So if you import, once it is now within the Philippine area, it now begins. Now, when does it end? Actually, it ends if ever you already paid for the custom taxes. So we read it. When deemed terminated. So importation is deemed terminated upon payment of the duties, taxes, and other charges due upon the articles or secured to be paid at the port of entry and at the legal permit for withdrawal shall have been granted. So this is only if there is already payment. There is already payment. So the question is, what if, what if that particular article or product is considered free from taxes? Free from taxes. What if it is free from taxes? Okay? So if ever the articles are free from taxes, meaning they are exempt from custom taxes, when is it terminated? Free or exempt? When is it terminated? Once it already leaves the customs. Okay? If it leaves the customs territory, it is considered terminated. Okay, again, when does it begin? If ever it is within the 12 nautical miles of the Philippines, if it entered that, it already begins. When it is terminated, when it is already paid. If ever it is subject to custom taxes, but if it's free from custom taxes, once it leaves the Bureau of Customs or the customs territory. Okay? So take note, jurisdiction is in the Philippines. When does it start? When it enters the Philippine jurisdiction. When does it end? It ends only when it is already paid or it leaves the customs territory if ever it is free or exempt from custom taxes. Take note, you can only subject it if ever it is already within the Philippines. So let's talk now about the functions of your collector of customs. So you already know the functions of BOC. You already know when does the BOC acquire jurisdiction. The question is who should perform those functions. So who performs the functions of the BOC? It is the collector of customs. So, what is the jurisdiction of the collector of customs? The jurisdiction of the collector of customs shall over imported articles shall cause all articles entering the jurisdiction of his district and destined for importation through his port to be entered at the customs house. Shall cause also such articles to be appraised and classified, shall assess and collect the duties, taxes, and other charges thereon, and shall hold possession of all imported articles upon which duties, taxes, and other charges have not been paid or secured to be paid, disposing of the same according to law. So the jurisdiction, again, it starts when it enters the Philippines. So once it enters the Philippines, now the collector of customs will start to enter that into a particular customs house and will appraise and classify that. As I told you, we have here your tariff heading at the time of classification. And now we'll try to assess and collect the duty based on that classification. So actually, the first step is to classify, and the next step is to value the total articles. Okay? So that's how the collector of customs work. But of course, it is not the collector of customs who do this work. It is already delegated to the different customs warehouses. So we've been talking about your customs. We now start defining what is a custom. So we try to differentiate tariffs versus custom duties. So what is a tariffs? What is a tariff and what is a custom duty? Tariffs, also known as a taripa, these are custom duties, toll, or tribute payable upon merchandise to the national government. Sometimes it is the rate of customs, or sometimes it is the list of articles liable to duties. While custom duties are the taxes on the importation and exportation of commodities, tariff or tax assessed upon merchandise from or exported to a foreign country. Actually, tariffs and custom duties are synonyms with one another because they both refer to taxes imposed on imported or exported articles or products. So they are used interchangeably, but they mean the same. They mean the total taxes that is imposed or collected based on an imported or exported article. Okay. How about if we compare tariff versus customs? We said tariff and custom duties, they mean the taxes. So what about tariff or custom? Tariff mean the taxes. Tariff mean the taxes. While customs refer to the required procedure for importation to and exportation from the Philippines of products, commodities, or articles. So this is the procedure. Take note, tariff and custom duty, they mean the same. It is taxes. But when we talk about custom, it means about the procedures. So the import procedures and the export procedures. Take note of that. Custom is different from tariff. Tariff and custom duties are the same. But customs, it means the procedure for the importation and exportation. So let's talk about your kinds of tariffs or custom duties. So we have the following kinds of tariffs or custom duties. First, we have your regular tariffs. So what is a regular tariff? So a regular tariff are the taxes that are imposed or assessed upon merchandise from or exported to a foreign country. So when we say from a foreign country, this talks about importation. If it is exported to foreign country, this talks about exportation. So this two means importation and exportation. Okay, from or exported to a foreign country for the purpose of raising revenue. Sometimes they are considered tariff barriers or protective barriers. So we call your regular tariffs as tariff barriers or protective barriers. Why is it called tariff or protective barriers? Because they are imposed so to prevent the entry of the merchandise here in the Philippines. Okay? And what are the types of regular tariffs? Types of regular tariffs. So the first type of your regular tariffs is your ad valorem. So what is this ad valorem? They are computed on the basis of transaction value of the imported articles. So transaction value plus a value based on the transaction value. Ad valorem. You add to the value. So from the transaction value, you add to the value. Next in specific custom duties. So this is based on the unit of measure, based on the unit of measure. So when we say unit of measure, it can either be a kilogram, piece, dozen, liters, etc. So based on a particular unit of measure. So for example, 2 pesos per kilogram and then you imported 100 kilograms. So how much is the custom duty specific? 2 times 100, 200. That's how your specific custom duties work. How about ad valorem? You add to the value. So for example, the total value is 50,000. You add 10% out of that. So that is 5,000 custom duty. Clear? Ad valorem, you add to the value specific custom duty based on a unit of measure, whether the measure is kilogram, per piece, per dozen, per liter, etc. You compute it based on that. Next, you have your mixed or compound regular custom duty. When we say mixed or compound regular custom duty, they are imposed both on your ad valorem and specific custom duties. So mixed or compound, you have ad valorem already, and you have specific. So for example, 10% ad valorem plus 2 pesos per kilogram. Right? So if it's mixed or compound, you have ad valorem and specific. So a while back, our example in ad valorem, 10% only. Specific per piece, per unit, per kilogram. For mixed or compound, there is ad valorem and at the same time, it is specific. So 10% ad valorem plus 2 pesos per kilogram. So you combine now ad valorem and specific. Okay? Regular custom duties. How about special custom duties? So when we talk about special custom duties, these are additional import duties imposed on specific kinds of imported articles under certain conditions. So under certain conditions. So this is your uh, custom duty that is imposed for the protection of consumers and of course the manufacturers. So what are the kinds? If we have the different types of regular custom duties, what are the different types of special custom duties? So the first is your anti-dumping duty. Anti-dumping duty. The anti-dumping duty is a special duty imposed on the importation of a particular product at less than its normal value when destined for domestic consumption in the exporting country, which importation is causing or is threatening to cause material injury to a domestic industry or materially retards the establishment of a domestic industry producing the like product. So this anti-dumping duty happens if ever an exporting country dumps its product here at a lower price. So it is at less than the normal value here. So again, take note, special is imposed so that we have a protection on certain consumers or manufacturers. So in your anti-dumping duty, they dump now their product here in the Philippines at a lower price. Therefore, the other businesses here in the Philippines would not sell that already because, of course, since it is lower price coming from foreign country, the competition now of the Philippine market with that particular imported article is not at par. Why? Because of course you will buy the lower price, which is important. That's why we give a special type of duty. We call that anti-dumping duty. Sir, how do we compute for the anti-dumping duty? Since it is a lower price, to compute for the anti-dumping duty, it is the difference between the export price, which is the lower price, less the normal value of that particular product or article. That is the anti-dumping duty. So for example, guys, uh, the US will export mass here in the Philippines. In the PH, a mass is worth 5 pesos per piece. Now, since the US will export in the PH, meaning the PH will import the mass from the US. The US only imports that for 50 cents. 50 cents. So there is much difference between the import cost and the normal value here in the Philippines. So what we do, we impose an anti-dumping duty so that we try to equalize the cost of that imported article with the article we have here in the Philippines. The article we have here in the Philippines is 5. The article that will be imported is zero point 0.5. So the difference is the anti-dumping duty, 4.5, 4.5. Okay? So it is equal to your export price or the lower price less the normal value, 5 less zero point 0.5, 4.5. And who imposes it is the DTI. It is the DTI. Sir, why is it the DTI? Because it is the DTI who knows the prices. The prices of the different commodities or products is known by the DTI. Therefore, if ever we want to compare the cost of the imported material together with the normal value here in the Philippines, we need to seek the DTI. So the DTI now imposes the anti-dumping duty. Anti-dumping duty. Okay, another special type of custom duty is your countervailing duty. Okay, so this is additional duty which is granted directly or indirectly by the government in the country of origin or exportation, any kind or form of a specific subsidy upon the production, manufacture, or exportation of such product, commodity or article, and the importation of such subsidized product, commodity or article has caused or threatened to cause material injury to a domestic industry. So if anti-dumping duty is lower, countervailing duty, there is a subsidized article or product from a foreign government. Okay, from a foreign government. So for example, uh, here in the PH, we have a mass. Okay. Now the US will try to subsidize PH with more mass. Because of this more mass, what happens now with the PH mass consumer or manufacturer, they are now threatened because again with the subsidy, the consumers might not buy from the Philippines or from the Philippines manufacturer. Therefore, what happens now is that the subsidized material will be subject to a countervailing duty. Take note, its special custom duties are given for the protection of the consumers. So in anti-dumping duty, there is a lower price. In countervailing duty, there is a subsidized article or product which now threatens an industry. Okay? So that is your countervailing duty. Sir, what is the amount of our countervailing duty? If the amount of your anti-dumping duty is equal to your export price less the normal value, how about your countervailing duty? The countervailing duty is equivalent to the value of the subsidy. Okay? Anti-dumping duty, the lower price versus the normal value. Countervailing duty, it is the value of the subsidy. Next, marking duty. Okay. Marking duty is the duty imposed if ever a foreign article is not marked by an official language of the Philippines. Okay, marking duty if ever the foreign article is not marked with the official language of the Philippines. So, for example, you imported from China, of course, it will enter the Philippines. However, the article is written in Pinyin. It's written in Pinyin. So, let's say, for example, like that. That is the price. The price is like that. So, it's written in Pinyin. Now, it's if it is written in Pinyin characters, what happens now is that it is not in the official language of the Philippines. So you will be the special duty there is a marking duty. So what is the amount of the marking duty? If the anti-dumping duty is equal to EP less NV, countervailing duty is the amount of the subsidy, marking duty is equal to 5% of the dutiable value. 5% of the dutiable value, that's for marking duty. And another special duty is your discriminating duty. So a discriminating duty is an additional customs duty which is imposed in a vessel of a foreign country, which imposes directly or indirectly upon the disposition or transportation in transit or through exportation from such country of any article wholly or in part of the growth of the product of the Philippines, any unreasonable charge, exaction, regulation, or limitation, or it discriminates against the commerce of the Philippines. The Philippines. So as long as it discriminates, guys, as long as the article imported discriminates the product of the Philippines, you add 100% ad valorem. That is the maximum. 100% ad valorem. Okay. So, when do we impose special? Okay, regular always meron yan. Regular always yan meron. Depending on the tariff heading, ad valorem, specific, mixed, or compound. Now, when do we impose special? We impose special if ever for the protection of our consumers or manufacturers for any undue competition made by the foreign products. So first, we have anti-dumping duty if ever we are dumped with a lower price. So we get the difference between the normal price. Countervailing duty if we are subsidized with a foreign product and it threatens our market. Therefore, we subject it equivalent to the value of the subsidy. Marking duty if ever it is not properly marked in our official language, which is of course English or Filipino. Then if ever it is not properly marked, it is 5% of the dutiable value. And discriminating duty if ever it discriminates any product made by the Philippines, you subject it to 100% ad valorem. That is the maximum. Of course, you cannot subject it to 150, 101, only up to 100%. Third question, can we subject it lower than 100%? Yes, because this is only the maximum. It did not give for a minimum. It does not give for a minimum, it gave for a maximum. So you can subject it to 90%, 80%. The maximum is 100%. So generally, we have your regular custom duty plus your special custom duty if ever the four or any of the four is present. If ever we have a lower price than the normal value. Next, if ever we are subsidized by a foreign government, if ever it is not properly marked, we have a special duty. And then lastly, if ever it discriminates on our product, we have a discriminating duty. What is the amount of our duty if ever lower? If ever lower, that is your export price less the normal value. Subsidize the amount of the subsidy. If ever it is not properly marked, 5% of the value of that particular imported goods. If it is discriminated, 100% ad valorem. Okay? Or 5% ad valorem. Regular and special kinds of tariffs or custom duties. Remember when to impose. Regular custom duty, always impose that. When to impose a special custom duty if any of the four are present, if any. There's a chance that both are present, it discriminates, and at the same time, it is not properly marked. Yes, that can happen. That can happen. Now, how do we compute for the custom duties? As I told you a while back, we first need to classify it. So the first step is to classify the articles into their appropriate tariff heading. So what is the tariff heading? You classify the goods by assigning them a code which is made up of chapters, headings, subheadings, and custom duties. So it depends, guys. Actually, we have too much and too many custom headings or tariff headings. And if you want to look into a particular tariff, you can try to find it using the tariff finder by our tariff commission. So it is an app, or it is a web page app that shows you the proper classification. After we classify them, we value it. So again, in your evaluation, we have two. First, we have your regular custom duty and then specific custom duty. We're done discussing the different specific custom duty. We are now talking about the regular custom duty. For regular custom duty, we have the valuation if it's ad valorem or compound. Under the current law, for ad valorem or mixed compound custom duties, the valuation system uses the transaction value and its absence the alternative methods. So transaction value, of course, is the total value of the imported article. Total value of the imported article. So, of course, this is equal to the foreign currency multiplied by, what do we call this one? You multiply it to the conversion value here in the Philippines. That is the transaction value. If the transaction value is not given, you can use the alternative methods. So what are the alternative methods? Take note, use only the transaction value. If no transaction value, then the alternative methods. The first alternative method is the transaction value of identical goods. Of course, identical goods. If ever you imported iPhone 12, this is the value provided there. Therefore, if there is another importation and the transaction value is not given, you can get that to the value of the identical iPhone 12, which is 64 gig and the color is like this. So they are identical. Next, transaction value of your similar. When we say identical, they are really the same. If it's similar, they only have certain characteristics that they are the same. If identical, they are all the same. Similar, only some. Only some. So in this particular method, you get the similar goods which is now imported or exported in the Philippines. So whatever is the value of the similar goods, that is also the value. The fourth one, if ever you don't have transaction value, no identical goods, no similar goods, you can use the deductive value. When we say deductive value, it is the unit price of that particular imported goods. Okay? Deductive value. You need the unit price of this particular uh, unit price of that imported goods or identical goods. And then you will deduct the following. Okay? So the unit price, and you deduct the following. First, you deduct any commissions. Next, transport and insurance costs. And then lastly, any loading or unloading costs. Okay? It is known as deductive value because from a price, you deduct some items. So what are the items deducted? Commissions, transport and insurance costs, loading or unloading costs. Next, if we cannot get transaction value, we cannot get deductive value, then we can either get your computed value. When we say computed value, you get the sum of the cost of the value and then the amount of profit and general expenses You also have freight and insurance fees. And then we have also your cost of container or packing. So this is the value. This is the value. So deductive value, you deduct some items from a price, while a computed value, you get for the total value or the total cost. So the cost of the item, any profit, expenses, freight, insurance, and any cost on packing that particular item. How about a fallback value? Okay. A fallback value is any value that is used as reasonable means and basis for the computation of your imported article. So any reasonable means. Okay. Again, how do we value ad valorem or compound items? First, transaction value. If no transaction value, value of identical or similar goods. If no transaction value, identical or similar goods, deductive value. How to compute for deductive value? This one. If no deductive value, computed value. How to compute for computed value? This one. If no computed value, you cannot really compute it at all, then a fallback value. Any reasonable means to determine the value of that property. Why? Because it is ad valorem or compound. When we say ad valorem, you need to get the value because ad valorem is based on value. So how do you compute that value? These are the items. Next, if it's specific, of course, the unit of measure. We do not have any problem with that valuation because you just need to get for the unit of measure, whether it is kilogram, it is per piece, per liter, per ounce, whatsoever. Okay? That's how we value it. Okay. Again, generally, customs is this way. First, we classify it. Upon classification, we determine if ever it is subject to ad valorem, or is it subject to specific, or is it subject to compound. If it's ad valorem, it is value multiplied by a certain percentage. Okay, value multiplied by a certain percentage. How do we collect for the value? First, transaction value. If no transaction value, identical. If no identical, we get the similar. If no similar, if no similar, then we can get the deductive value. If no deductive, then we can get the computed. If no computed, then the last one, fallback value. Specific, it is based on a unit of measure. Compound, ad valorem, plus specific. Okay? So this is to compute for your regular custom duty. And then we can compute for your specific custom duty. So what are the different specific custom duties again? First, we have your anti-dumping duty. Next, we have your countervailing. Next, we have your marking duty. And then lastly, we have your discriminating duty. So when do we impose anti-dumping duty? Lower value. So what we do this here is we get the normal value less the export price or the import price. Countervailing duty if ever it is the subsidized or it is subsidy coming from the government. Marking duty if not properly marked. This is 5% ad valorem. Discriminating as long as it discriminates our products 100% ad valorem. So regular custom duty plus specific custom duty, this is your total custom duties. So this is done at the time it enters Philippine jurisdiction, and at the time, if it is taxable, it ends at the time it is already paid. And if it is non-taxable, then at the time it leaves the custom warehouse. Okay, so that's for our tariff and customs taxation. Regular, how to compute. Specific, how to compute. When do we start taxing it? And when do we end taxing it? That's it for customs taxation.